Hello dear students, welcome to my channel Bhavani Commerce Academy, and this is the third solution of funds flow analysis with adjustments. Let's see. From the following balance sheet of Katak Limited, prepare a schedule of changes in working capital and funds flow statement. Here given 2 years balance sheet, one is 2021, other one is 2020. Once you check, here given 21 and 20. So this is the current year and this is the previous year. Okay, so here given shareholders funds, non-current liabilities, current liabilities. Under assets, we have non-current assets and current assets. Under non-current assets, we have tangible assets, intangible assets. Tangible assets are nothing but, already we know, which we can touch, which we can see, that assets are called tangible assets. Which we cannot see, which we cannot touch, that type of assets are called intangible assets. Example here given, goodwill, intangible asset. And current assets here given, debtors, bills receivables, stock, that is also called inventories, cash and bank. So here given additional information also. So depreciation charged on plant and machinery was 20,000 and on building was 40,000. Here given depreciation on machinery as well as building. So that we need to maintain plant and machinery account in the working notes as well as building account in the working notes. Okay. First do the working notes. After calculation of working notes, we will see the solution. See here, depreciation charged on plant and machinery 20,000. So that we need to maintain plant and machinery account in the working notes. So that I am writing here working notes. Okay. In this working notes, first plant and machinery account, because here given depreciation on plant and machinery. So is there opening and closing stock? Once you check. In the balance sheet, asset side we have plant and machinery. Here given 2021 details and 2020 details. 2020 is the previous year, 2021 is the current year. So current year is a closing balance and previous year is the opening balance. Here opening balance is 80,000 and closing balance is 2 lakhs of plant and machinery. Okay, so plant and machinery is an asset that shows debit balance. So that debit side opening balance, credit side closing balance. So here I am writing 2 opening balance by closing balance. So what is the opening balance here? 80,000. And closing balance is 2 lakhs. Okay. And regarding this, we have a depreciation under additional information, that is 20,000. Depreciation we need to write in the plant and machinery account, credit side. What is the amount of depreciation here? 20,000. Okay. Close this. Which side is more? Credit is more. 2 lakhs 20,000. Write both sides. 2 lakhs 20,000. 2 lakhs 20,000 minus 80,000. What is the balance amount here? 1 lakh 40,000. Okay. So what is this balance amount? To cash in bracket purchase. If the balancing figure is debit side, that will be purchase of asset. If the balancing figure is credit side, that will be sale of asset. But in this plant and machinery account, our balancing figure is debit side. So that I am writing to cash in bracket purchase, that is balancing figure. Where we should write purchase of plant and machinery? In the sources and applications, application side. And next, depreciation on buildings 40,000. So that we need to maintain buildings account in the working notes. So building is also asset that shows debit balance, debit side opening balance, credit side closing balance. Okay, so what is the opening balance of building? Here given asset side, buildings opening balance is 1,60,000, closing balance is 1,20,000. So 1,60,000, 1,20,000. Okay, and here given depreciation is 40,000. Depreciation is, we need to write credit side of the buildings account. 40,000. Do the balance. 1,60,000 here, 1,20,000 plus 40, 1,60,000. Both are equal. And there is no purchase, there is no sale because there is no balancing figure. Okay. And this is the first statement, schedule of changes in working capital. In this statement, we have particulars column, previous year, current year. So in this question, we have previous year is 2020, current year is 2021. And we need to write working capital increase column, decrease column. So in the particulars column, first we need to write current assets because working capital means the difference between the current assets and current liabilities. So here we need to take current assets. Under current assets we have, see here, from asset side, current assets, debtors, bills receivable, stock, cash and bank here given. These details we need to write here, and 2021-20 details here given. First we need to write 2020 details, then we need to write 2021 details because we are writing previous year first, current year next. So 2,20,000, 2,85,000, 18,000, 24,000, 20,000, 30,000, 25,000, 18,000. These details we posted here. Okay. And next, under current liabilities, we have trade payables. Trade payables are nothing but here creditors and bills payable. So here also same 60,000, 80,000, 15,000, 90,000 we need to post under current liabilities. Creditors and bills payable. Okay, so 2020 details and 2021 details. Then after posting these details, we need to total it. For 2020, current assets are, what is the total here? 2,20,000 plus 18,000 plus 20,000 plus 25,000. What is the total? 2,83,000. Okay. And next, 2,85,000 plus 24,000 plus 30,000 plus 18,000. What is the total here? 3,57,000. Okay. Next, 60,000 plus 15,000, 75,000. 80,000, 19,000, 99,000. Okay. Then what we should write? Working capital. Working capital means current assets minus current liabilities. This total minus this total. So 2,83,000 minus 75,000. 2,08,000. Okay. Next, 3,57,000 minus 99,000. 2,58,000. Okay. Again do the balance. Which side is more? 2020 or 2021? 2021 is more. So 2,58,000, write both the sides. 2,58,000. 2,58,000 we need to write both the sides. So 2,58,000 minus 2,08,000. What is the balance amount? 50,000. Okay. After writing this balancing figure, we need to fill these columns by using 4 points. What are the 4 points? Already we know that 4 points. What are the 4 points? Current asset increase, working capital also increase. Current asset decrease, working capital also decrease. Current liabilities increase, working capital decrease, opposite direction. So current liabilities is decrease, working capital increases. Okay, so follow these 4 rules while calculating these 2 columns. Follow these 4 rules while calculating these 4 columns. Okay, See here, current asset, debtor, 2,20,000, 2,85,000. Increased or decreased compared to last year? This year increased. How much increased? 2,20,000, 2,85,000 means 65,000 difference is there. That is 65,000 increase. Here current asset increase means working capital also increase. So in the working capital we need to write in the increase column 65,000. How much increased? 65,000. Okay. Decrease column nil. Bills receivable 18,000, 24,000. Here also increase. How much increase? 6,000. If current asset is increased, working capital also increases. So 6,000 in the increase column. Stock 20,000, 30,000. Here also same increased, 10,000 increased. Okay. And 25,000, 18,000. Cash and bank 25,000, 18,000. So compared to last year, this year balance reduced. So how much reduced? How much decreased here? 7,000. So here decrease means in the decrease column we need to write 7,000. And coming to current liabilities, credit are 60,000, 80,000. So 20,000 increased. Here increased means current liability increase means working capital decrease. So 20,000 increase means where we should write in the decrease column we need to write 20,000 opposite. Okay. And next 15,000, 19,000. Here also increased. How much increased? 4,000. Here increased means you need to write in the decrease column 4,000. Okay. So all the details are over. And now you need to do the balance here. So which side is more? Increase column is more. How much? 65 plus 6 plus 10, 81,000. 81,000 minus 7,000, 20,000 and 4,000. Our balancing figure will be 50,000. See here 50,000, here also 50,000. So both are equal. So our answer is right. And our answer in the decrease column, so the amount is called as net increase in working capital. If you are answering decrease column, you need to write increase. If you are answering increase column, you need to write decrease. So our answer in decrease column. So you need to write opposite. Net increase in working capital. Okay. And our second statement is funds from operations. It is also called adjusted profit and loss. Okay. Under that we have particulars column and amount column. First we need to write net profit. If there is no net profit in the additional information, we need to check in the balance sheet liability side. There is a profit and loss or not, we need to check. So under liability side, we have shareholders funds. Under that we have profit and loss balance is there. So what is that? 48,000 and 30,000. So 30,000 is the opening balance, 48,000 is the closing balance. So profit and loss, closing balance minus opening balance. So what is the closing balance? 48,000. So 48,000 minus 30,000. Balance amount is 18,000. This is the net profit. Okay. Here we need to add some items. Once you check in the working notes first. After that, check in the balance sheet. Okay. See working notes, plant and machinery. In this plant and machinery, we have, so this depreciation, we need to post in the funds from operations, adding items, and the balancing figure is goes to application side of the sources and applications. That is nothing but third statement, funds flow statement. Opening and closing ignored. And building account we prepared. In this building account, we have opening and closing balances. So while posting, we need to ignore the opening and closing balances. Yes. So remaining items we need to post in the main accounts, main statements. Depreciation will comes under funds from operations, adding item, and there is no balancing figure. If you have balancing figure, you need to post in the sources either application. If it is debit side balancing figure, that will comes under application side. If it is a credit side balancing figure, that will comes under sources side. So now we need to take depreciation of plant and machinery, depreciation of building in the second statement. Depreciation on plant and machinery. How much depreciation on plant and machinery? 20,000. Next, depreciation on building. What is the amount of building depreciation? 40,000. Okay. Any other details here we need to add once you check in the balance sheet. Under balance sheet we have liability side, equity share capital, that will comes under the funds flow statement. That is nothing but last statement. Reserves and surplus. Under reserves and surplus we have general reserve, profit and loss. So profit and loss already we taken at the top of the funds from operations, and remaining general reserve, where we should take general reserve under funds from operations only, transfer to general reserve. So what is the amount here? 70,000, 40,000. Difference between both values. What is the amount here? Difference amount 30,000. Okay. And any other non-current liabilities, 12% debentures. This will comes under last statement. Current liabilities already we taken in the first statement, and goes to asset side. Under assets we have non-current assets, building. Already we have working notes regarding the building. By using that working notes only we need to post into other statements. Plant and machinery also same. Intangible assets. Intangible assets comes under funds from operations, that is second statement only. So here given last year 72,000, this year 40,000 of goodwill is there. So it is decreased. Decreased means how much decreased? 32,000. So goodwill decreased means goodwill written off. That goodwill written off. What is the difference here? 32,000. 32,000 decreased. Okay. And next, current assets already we taken in the first statement. Okay. And there is no deducting items. Deducting items are nothing but appreciation of assets and dividend received, interest received, profit on sale of asset. But there is no information regarding those details. So take the total here. 18,000 plus 20,000 plus 40,000, 30,000, 32,000. What is the total? 1,40,000. Okay, what is this called? Funds from operations profit. If it is negative balance, that will be loss, but it is positive value. So that it is called funds from operations profit. Okay. And next statement is funds flow statement. While preparing funds flow statement, first we need to post first statement answer and second statement answer. What is the first statement answer here? Our first statement is changes in working capital. Answer is net increase in working capital. Net increase in working capital. Net increase in working capital comes under application side. How much balance is there? 50,000. Okay. What is our second statement? Funds from operations. In that funds from operation, what is our balance amount? 1,40,000. That is profit. So funds from operations profit will comes under sources side. 1,40,000. If it is loss, that will comes under applications. And net increase in working capital application, net decrease in working capital comes under source. Okay. After writing these two answers, we need to check working notes. In the working notes, we have plant and machinery account. In the plant and machinery account, we have balancing figure. That balancing figure is debit side of the plant and machinery account. So that is called purchase of plant and machinery. So purchase of plant and machinery will comes under application side. Because at the time of purchase of plant and machinery, cash is going out, outflow of fund. Application is nothing but outflow of fund. So what is the amount here? 1,40,000. Okay. Coming to buildings account. In the buildings account, there is no balancing figure. If you have balancing figure, that will comes under sources and application side. So if it is debit side balancing figure, that will comes under application side. If it is credit side balancing figure, that will comes under sources side. But there is no balancing figure. debit equals to credit in the buildings account. After posting working notes details, we need to go to balance sheet. Under balance sheet, we have equity liabilities are there. In this, we have shareholders funds. Under shareholders funds, equity share capital is there. Equity share capital last year 3 lakhs, this year 4 lakhs. Compared to last year, this year 1 lakh increased. Increased means issue. So, issue of share capital will comes under source. If it is increased, that will comes under source. One lakh. Okay. And next, reserves and surplus. Under reserves and surplus, general reserve, profit and loss account already we taken in the funds from operations, and non-current liabilities here given 12% debentures. 1,50,000 last year and this year 1 lakh. That means reduced. How much reduced? 50,000. So reduced means redemption. So redemption will comes under application side. Redemption of debentures. How much? 50,000. And coming to current liabilities, all current liabilities we taken in the first statement, that is changes in working capital. And next, coming to asset side, here we have non-current assets, tangible assets. So already we have building account is there. In that building account, once you check, in the building account already we taken opening and closing balances. So opening and closing balances we need to ignore while posting in the main statements. What we should take? Remaining balances. Depreciation already we taken in the funds from operations, and there is no balancing figure. And coming to next, plant and machinery. Already we have working notes. Plant and machinery, opening and closing balances we taken here, and here given depreciation. The depreciation we taken in the second statement, funds from operations, and the balancing figure already we taken in the funds flow statement, application side, purchase of plant and machinery. Okay. And intangible assets, that is comes under funds from operations, already we taken, and current assets we taken in the first statement, that is changes in working capital. So all the details are completed. Now balance it. 50,000, 1,40,000 and 50,000. How much total gives? 2,40,000. 1,40,000, 1 lakh, 2,40,000. So sources are equals to applications. So our answer is right. Thank you.